If you still think Bitcoin is just a retail toy, you might want to sit down for this, because while headlines scream crash and 5 red months scare tourists out of the market, a government-controlled bank in Dubai is quietly preparing to allocate capital, not to crypto, not to altcoins, to Bitcoin. Let's talk about what just happened. Maurice Gravier, CIO for Wealth Management at Emirates NBD, went on CNBC, and he didn't sound speculative, he didn't sound emotional, he sounded prepared. He said they have opened the process to allow Bitcoin allocation up to 1%, and he called it digital gold. A state-controlled bank in one of the most strategically positioned financial hubs on Earth just publicly framed Bitcoin as digital gold. That's not retail language. That's institutional positioning. Now, here's the interesting part. He didn't say maybe someday. He said, one day we'll pull the trigger. That doesn't sound like debate. That sounds like timing. But timing requires calibration, because institutions don't buy narratives. They buy models. And according to Emirates NBD, their internal valuation model suggests a 12-month fair value of around $100,000. Let that sink in for a moment. A government-controlled bank says Bitcoin may be worth 6 figures within a year, and they said this after 5 red months. Not at the top, not during euphoria. Now, of course, they're cautious. They mentioned volatility, they mentioned correlation with risk assets. That part is important. Institutions don't want excitement. They want diversification. They want controlled exposure. They want something that doesn't move like tech stocks. And yes, Bitcoin still correlates with risk appetite, but here's what they also said. With proper calibration, it works. Translation: volatility is manageable if position sizing is correct. That's not rejection, that's portfolio engineering. And here's the part that matters even more. When asked about Ethereum or, other crypto assets, they declined. Not aggressively, just calmly. For now, we only look at Bitcoin. Why? Because in their words, Bitcoin has already won as a store of value. Let's pause again. A state-linked bank publicly stating Bitcoin has won the store of value race. Not experimenting, not exploring, won. Now, zoom out. This isn't happening in isolation. The UAE has been moving quietly. Mubadala, Abu Dhabi's sovereign wealth fund, has been accumulating Bitcoin ETFs. Hundreds of millions. In fact, they increased their position by over 45%. That's not dabbling, that's scaling. Another state-backed vehicle, Al Warda Investment, holds hundreds of millions in Bitcoin ETFs. And according to Arkham Intelligence, the UAE may even hold thousands of Bitcoin directly through state mining operations. Over 6,800 BTC, built quietly, accumulated structurally. Now ask yourself something. Do sovereign entities allocate to dying experiments, or do they position early for structural shifts? Because while retail investors debate whether 5 red months mean doom, governments are running models and opening allocation frameworks. This is the psychological divide. Retail reacts to price. Institutions react to structure. When price rises, retail feels confident. When price falls, retail feels betrayed. Institutions ask, has the thesis changed? Has the supply cap changed? Has the network failed? Has adoption structurally reversed? If the answer is no, then price weakness becomes calibration, not collapse. Now let's talk about the 1%. You might think 1%? That's tiny, yes and no. In absolute numbers, it might translate to a few $100 million. But signal value matters more than size. When a state-controlled bank allocates even 0.5%, other banks watch. Risk committees observe. Competitors reassess. Because honestly, nobody wants to be the last institution to recognize a structural asset. Institutional adoption doesn't happen in waves. It happens in thresholds. First, they allow custody, then trading, then collateral, then allocation. Emirates NBD just moved from tolerance to allocation planning. That's a phase shift. Now let's address the volatility argument. Yes, Bitcoin is volatile, it always has been. But volatility declines as market depth increases. And correlation with risk assets, well, that's liquidity driven. In tightening cycles, everything correlates. In easing cycles, differentiation returns. Institutions understand cycles. Retail feels them. There's a difference. And here's the part most people miss. They didn't say Bitcoin is perfect. They said it functions as a store of value. That's conservative language. And conservative language in finance is often the most bullish signal you'll ever get. No hype, no moon targets, just allocation. Now imagine something for a moment. If volatility decreases over time, if correlation weakens, and if regulatory clarity improves, what happens to institutional allocation percentages? Does 1% just stay at 1%? Or does it become 2, maybe 3, even 5? You really don't need retail mania for price expansion. What you need is capital rotation. And, capital rotation is slow, it's quiet, and it's deliberate. Right now, you're watching a market where sentiment is, well, negative. The media says crash, Twitter says bear market. But sovereign funds are actually increasing exposure, and state banks are building allocation frameworks. That's what we call divergence. When sentiment and structure diverge, you need to pay attention, because this isn't about tomorrow's price candle. It's about positioning. And honestly, positioning happens before narratives flip. Now here's the honest part. This doesn't mean price rockets tomorrow. It doesn't mean volatility disappears next month. Institutions, they move in quarters, not in days. But what it does mean is that Bitcoin is no longer a fringe asset in serious financial circles. It's being modeled, calibrated, risk-adjusted, and quietly prepared. The question isn't whether retail feels confident. The real question is whether structural capital is moving closer, and right now, it is. If you're watching 5 red months and thinking collapse, just zoom out. A government-controlled bank just called Bitcoin digital gold and said they'll pull the trigger. 1% today may look small, but signals compound, just like cycles do. And sometimes the most important moves happen when nobody's cheering. Stay rational, stay calibrated, and remember, retail reacts to volatility. Institutions prepare for inevitability.